Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's topic is, can I buy a home if I only make $20,000? Yes, you can. You'll be limited, but it's definitely possible. What you must do, of course, is really save your money, cut down on expenses, and try to make your money grow through small investments like CDs. I'm telling you, putting your money in the savings account and expecting any significant growth is really not going to happen. At the end of the year, you're lucky if you even get $1. So look into CDs, and if you can, try and see if you can take a course or go to the library and get a free book. Learn about investing in mutual funds and ETFs. You also have Facebook groups that help you with interpersonal finances that can also assist you with how to invest. You really need to learn how the market works in order to make wise decisions in choosing the proper funds out there. And some funds today, there are a lot of platforms that you can invest in for only $5. So I would definitely look into that. Next, get pre approved for a loan. Because why? You want to see exactly what is doable with your particular income. I can't give you an exact figure of what it is that you would be eligible for, because one person who makes $20,000 who's single with no kids is going to be qualified for more money possibly than someone who has several kids. Someone with good credit is going to be qualified for more than someone who does not have good credit. So that's why you should go to a bank or a credit union and get pre-approved first. You also want to investigate, and the banks might actually have knowledge of this, any special programs that your states have to assist you since you would be considered low income. Another area or another place where you can get assistance, of course, is HUD. They will tell you what low income programs are available for people who are interested in home ownership. You can also go to the down payment assistance website, put in your zip code, and see what else you may be available, or excuse me, that you may be eligible for. On top of that, don't forget that there are organizations like Prosperity Now that has a list of individual matching accounts where whatever money you put down, there is an organization that will give you a grant that matches you. Sometimes they match you dollar for dollar. Sometimes every dollar you put in, they'll give you $2. Another organization that may be able to assist is Habitat for Humanity. With that particular program, it is designed for low income people. The catch is that you have to help build your own home. There'll be other contractors there to assist you, but you have to put in some physical sweat equity into the home that you will live in. Now, if you are in New York, it is going to be difficult, but there are programs out there. There's Till and Till 2, where if everybody in your building agrees to join this particular program, you get to buy your apartment for $250. If you guys decide to go with the ANCP program, then you buy your apartment for $2,500. if you're not able to get the rest of the tenants together to own the property, then your next resort is to go through the Michelama Co-op program. Mind you, there is a 3 to 4 year wait, but I'm noticing that since a lot of baby boomers are passing on, people are actually getting in quicker than usual. You can actually find apartments there for $30,000 and $40,000. All of these programs that I just mentioned above, Till, ANCP, and Michelama, they actually take the Section 8 voucher program. And the minimum income required for the Section 8 voucher program is $14,500. Now, if you live in Washington, D.C., there is something called the TOPA Act. And if I'm not mistaken, I don't believe there is an income limit, but there is a limit as far as how long you have lived in that apartment in that particular building. And all of the tenants in that building do not have to agree to buy the apartment like New York does. In DC, as long as you live there for a certain period of time, especially if you are disabled or elderly, you get to keep that apartment, and your rent cannot be, or the maintenance cost can't be above a certain amount. Next, the other things that you can consider are tax deeds, liens, and notes. In certain states, definitely not New York City, or I would probably say not even New York, but I'm not too sure on that yet. But New York City, I can definitely say no to that. In other states, you can get the tax deeds, liens, and notes for $500 and up. Now, these properties may need some fixing up after, like after, let's say the person does not pay the taxes at all and you have to do a foreclosure. Foreclosure is normally, say, $5,000. After that, you may need to fix it up, and you can use the rest of the money that you have saved to do that. There are some risks. Again, get your education first before delving into that issue. Where have I seen $500 and up in tax deeds, liens, and notes? Indiana, the state of Indiana, and the state of Missouri. Both of those are actually, many of the cities there are going through a period of gentrification right now, the early stages. So right now is actually a good time to get in, particularly if you just want to invest. Next, the other thing to look at would be foreclosures and handyman specials. You can find those. Some banks have websites now where they actually list what properties that they're going to be foreclosing on. You can also go to different real estate magazines, and it'll even say handyman special. Now, I only recommend doing the tax deeds, liens, notes, fixer-uppers, handyman specials, and foreclosures if you are handy. Meaning you're good with a hammer, plumbing, and some electrical. But if you are somebody that you're not handy at all, you don't have a good team, you don't know any contractors, licensed ones, of course, then I would say that might not be the best route for you to go. But if you are handy, then you may want to look into those things. Next, the other area where you can look at is a company called Unison. Unison is an equity partnership. They help both first-time home buyers and also homeowners. So let's say you see a home, but you don't qualify for it because it's a little bit out of your price range. It's slightly higher than what you've been pre-approved for, and you don't have the 20% down payment. Then Unison will put down money as long as you have good credit. They will put down money to help you buy that particular home. The catch is that when you are ready to sell that particular home, or after 30 years, they are expecting a certain percentage from that sale or from the original price of the home back to them. So that is the only catch if you go through Unison. But I wouldn't even worry about that, because I'm thinking to myself, you could pay off the house before the 30 years. It has happened to many people before. In addition to that, you probably will have gotten another job where you're paid a little bit more than $20,000 a year. So I would definitely look into Unison. It's particularly for those of you who are not handy with a hammer. If you are not comfortable with Unison, if you don't have good credit, then I would say consider partnering with someone else. It could be a friend, it could be a relative, whoever has good business sense, who has good money management skills. As a matter of fact, if you are going to partner with someone, you don't even necessarily have to buy a single family, but you may want to actually consider buying a multifamily. You could sacrifice where the two of you live in the same compartment of the house for, let's say, 3 to 5 years, and then eventually one of you moves into another part of the house, if you understand what I'm saying. Because you can get a multifamily that comes with a finished basement, and one of you lives in the basement, the other live, on the regular floor, and then you rent out that other apartment and get that extra income coming in. You can do that. And as a matter of fact, in New York City, it is something that is done quite often among a lot of different races and a lot of different cultures. It's not one person that buys the home. It's a whole family that buys the home. It's a brother and a sister and a mother. That's actually occurred here. And I've bought properties with my mother. It's not an issue. I know it's an issue for those of you who come from another culture, but it may be something that you want to consider. And what many cultures have done is 5 of them put their money together, buy the property, and then they'll add a wing. They'll take out a second mortgage, build on top or adjacent to the property, or if there's enough land, build another house on that property. You got to do what you got to do if you want to get what you need. And it's all legal, of course. So, well, folks, those are my tips on how you can go about buying a home if your income is only $20,000. Where there is a will, there is definitely a way. So hopefully this information will inspire you to reboot your mind, reset your focus, and make smart financial moves. Feel free to pass this along. Remember, each one, reach one, teach one. Bye for now. Until next time.